Just run us through your thoughts on FirstRand. Let's kick off with FirstRand's results. We saw normalized earnings per share increasing by some 26%. Strong performance coming through once again for FNB. A strong performance, particularly for Westbank. 60% year-on-year growth in earnings. RMB slipping back, but overall a good period, good interim result for FirstRand.
The FirstRand results on the face did come in ahead of expectations, came in slightly ahead of what we were looking for. As you mentioned, a good performance from the bank itself as well as from Westbank. The poor performance from RMB as well as those good performances does seem like they were pretty well anticipated, given that FirstRand had already provided guidance through the course of last week. It looks like a lot of that priced in last week already. We had gains of 3% on Thursday and 5% on Friday already. Maybe one area of some disappointment might have been a little bit on the dividend side. That came in a little bit below what we were looking for. But on the whole, markets seem to take comfort in the result itself, and also outlook going into the second half. Probably a reasonably high base to surmount, but it does look attainable, and that reflective in the price today as well.
Yeah, we saw the stock rallying today, as you say, perhaps some disappointment around the dividend, but looking at areas where they're looking to grow, unsecured lending is an area that FNB wants to grow, whereas ABSA is looking to stay out of the unsecured space. We actually saw margins improve for FNB on the back of lending to the unsecured space, specifically in the middle income segment, which is quite interesting. Are you tracking exposure of the big four banks to this growth area?
Generally, we are keeping a close watch on that kind of growth. Does look like FirstRand probably one of the banks that has pushed on the lending side more aggressively than some of the others.
As just speaking to Ian Kirk, of course the underwriting business performed well. We saw the equity market exposure and fixed income market exposure hit the portfolio of Santam, but it seems like it's still the market, it's still the dominant player in the short-term insurance space. The share price reacted well to the special dividend. Do you have exposure to the likes of short-term insurers like Santam right now?
I think exposure to short-term insurers is limited at this point. You maybe get a little bit through the RMI stable or otherwise through Santam itself. The likes of Mutual and Federal was absorbed by Old Mutual a little while ago. So, for that kind of exposure, it is difficult to get direct exposure to the short-term insurers. Santam is probably the pick, or has been the pick over the last while for that kind of exposure. And today, while they did provide the guidance and headline earnings came in line with expected, as well as the ordinary divvy, it does look like that special dividend was the surprise that markets took real comfort and joy in.
Let's end off with a look at Royal Bafokeng's results. They came in line with expectations. Production slipping back. Safety stoppages is nothing new to the mining sector in South Africa. It's hit production across the board. But when you see Royal Bafokeng saying that by 2017 they hope to double production, would this be a reason to be getting exposure to the counter?
I think your view on platinum is very much dependent on operational or them getting over the operational issues that they have at present. Across the board we have seen operational issues. Impala probably the one that's dealing with the most of them, but all of them do have work stoppages and looking to get through that. Price-wise, it looks like for a real recovery in these platinum names do need a true pickup in price. They're probably marginal at this point, and going forward, maybe some of the more expensive ounces coming out or be forced out of production might provide some comfort for the PGM metals themselves going forward.